they would have found a business idea that wasn't that good. They would have collapsed or failed a long time ago. So generally, those who are successful today would have been tenacious enough, smart enough, and so on to build a good team and be really aggressive in growing themselves beyond the city that they started to the many cities that they are currently in today.
Yeah, that's really interesting. And do you have any specific verticals that you focus on, or any sectors?
Southeast Asia 10 years ago when we first started was in a space where everything was really greenfield, everything was available for investment. So we started out in what we call digital commerce, and I firmly believe that if without the payments infrastructure in place, without the logistic infrastructure in place, without just pure and simple just click to buy and so on, if all these things are not built first, we can forget about talking about AI. We can forget about talking about machine learning and all those stuff that will come later. And broadly speaking, what we term as deep tech. So that underlying layer is first, and that's digital commerce. Now, obviously, that layer has been built, and that infrastructure layer has been built in different stage of progress in different parts of Southeast Asia itself. But by and large, it's built. So with our latest thesis going out, we are focused on what we call the digital economy. So everything under the sun right now is ripe for disruption. We can talk about small and medium enterprises that are now looking at their businesses getting disrupted, that can use some bit of technology to level themselves up. So all these are things that we're looking at.
Mm-hmm. And do you follow any trends in the market, or do you kind of have a linear way of finding startups?
If you ask me 10 years ago, I'll say it's pretty linear, and I like to think that we are setting trends. Early stage investors or venture capitalists like yourself or like Burak himself, we need to understand that we are setting trends because the people or the founders that we are helping now that are potentially winners in 2 to 3 years time are they are the one raising money and they're the one disrupting their sectors that they choose to focus on. So we are leading, and the later stage investors like the series A and B and C and D, they are just followers.
Mm-hmm.
So I like to think that we have set the trends and we have laid the groundwork for Southeast Asia to have the digital payments or the digital economy infrastructure that we have today.
Mm-hmm.
In terms of trends that we take inspiration from, Silicon Valley remains a very good source of inspiration. That has been, and that I think will always be. But increasingly, we are looking at other hubs that are also good sources of inspiration. China being an obvious one, just because it's in our backyard, and because it has a volume to move markets. Europe as a whole have very interesting models. Rocket Internet being one of them. I'll say okay. I'll say that's about it.
Yeah. And okay, so would you be able to talk me through? So you mentioned kind of the founders really being the almost a selling point of a startup. So when you meet with a startup, are there any red flags that you look out for, or any what kind of stands out to you? If the founders are, quite smart and tenacious, but is there anything that would kind of turn you away from that startup?
I think founders who don't necessarily know their markets is a red flag. We have the COVID situation today, and I think COVID is affecting everyone. So you can see a lot of companies are now retrenching people and so on. And going by the experience with SARS, with the Great Recession, it is without a doubt that we will see a lot more entrepreneurs who will now be born just because they have lost their jobs in that they were in previously. While I'm open to funding people who have necessary domain expertise, having spent 10, 20 years in the expertise and coming out to do that, it is very clear when some entrepreneurs to be come and know that this is just an interim before the market gets better and they are back in the job market. So,
Right.
so I think this is very easy for us to suss out. And when we look at deals, ultimately it's still back to the founders. Idea is an idea, but execution counts. So it's still back to the founders.
Mm-hmm. I know this will be a question that a lot of people maybe in this conversation will be wondering, because at Startup Istanbul, we're kind of based around startups and entrepreneurs. So in your opinion, what would you say is the number one reason why entrepreneurs fail at their startups? Is it, like you mentioned it a little bit before, would it be not getting their market right, or what would you say is the reason?
Number one reason people fail is because they gave up.
Yeah.
COVID is a good example right now. We have startups that we know of. We have startups in our portfolio companies right now.
Mm-hmm.
One of them is just going to ask all the employees, most of the employees, to go on no paid leave. And if the employees choose to leave to go to another company, so be it. But at least he's preserving the company to make sure that there is cash reserve to pay suppliers and so on and so forth, and building a nest egg that I think will make him stronger when the crisis is over and he goes out to the market again. He could very well have given up and just say we are not going to survive for the next 1 year or so, and just return whatever investment has made, or and so on. He could have done that, but he did not.
Mm-hmm.
So number one reason is because founders give up.
Yeah. And would you be able to share any success stories from your portfolio companies? Any that stand out to you, or any that you've kind of monitored quite closely of a startup and how they've grown?
One of the startups that we are very proud of, and also because it was one of our earliest investments as I was making investments outside of China into Southeast Asia, is a company called Carousel, CAROUSELL. And it's not so much about what they are now, but what they were when they first started. And when they first started, they were bootstrapping. This was pre-WeWork, so co-working spaces were rare and generally run by universities. And you can imagine universities, this is not their core business. So it's just functional. It's not a sexy place where you can go and relax. But they're always working hard in that co-working space. And they were working until late at night. They took the last train or bus back home. They were usually one of the earlier ones in the office. On weekends, if they're not in the office, you know that they are sounding each other out to discuss stuff, or they are going down to the customer to check with them how is their user journey like, for example. That entire just digging in, getting to know the customer and so on is something that just stays with me. And today, even when they are almost a unicorn and they are relatively successful, they are still very down to earth. You can go to the office and it's just not they're just not extravagant.
You mentioned unicorns, so I'd love to know what's the potential to make or take a startup to unicorn status. What do you think is required from a startup, from your perspective, to really get to that level?
I think startup founders need to think for yourself. A unicorn is a very good bragging right, but on a share basis, meaning equity owned by yourself or your founding team, it may not necessarily be fantastic. So as you're building a unicorn or decacorn or anything like that, just bear in mind that yes, we are building a fantastically big company, but hopefully you're solving a big and real issue. Hopefully that issue is sustainable and not that a crisis will come and wipe it out. Not a valuation that is inflated for no reason or for little reason. And that it's something that you'll be proud of, and that at the end of a 10-year journey or a 15-year journey of building the startup, that you do walk away with some money in the bank to take care of your family and your friends who have been supporting you throughout.
Mm-hmm. Yep, that's some good insights. I just want to touch upon the current situation of COVID-19. I'm sure a lot of people will be wondering this as well. As your focus is kind of on digital commerce, one of the topics that people say is going to come out of the other side in this pandemic is e-commerce. So have you seen anything lately that's been positive from your kind of industry, or what's the market like for you guys?
On the e-commerce front, whether they are takeout, that's in deliveries and so on, or payments or bank transfers, these, for example, in bank transfers, we are seeing one company having 100% growth month on month. So COVID is really not all doom and gloom. In our latest newsletter, which we quoted Steve Blank, Steve Blank, the words are exactly from him. It's not all doom and gloom. Some models are definitely really built for crises like this. Some models need to adapt to survive, but that's the nature of every business, whether you're a startup or whether you're Boeing, for that matter.
And how, from a startup's perspective and from your perspective as a VC, how would you recommend startups reach out to VCs? So if they're looking to maybe do a potential fundraise or seed funding, or maybe later down in their journey, would you guys approach startups, or is it usually the other way around? Would a startup kind of find you and then build that connection and relationship?
It's a mixture of both. While we do have a lot of startups coming, just by default, we have to really just filter it, and then reach out to those who have reached in to us, and reach out to those that we really think fit into our thesis. Just because a startup doesn't get funding from us or from any fund, doesn't mean that the startup is lousy. It just means that perhaps it doesn't fit into the thesis of that fund. For example, we don't do medical or biotech. So any bio or medical tech company that comes to us obviously will say no. And it's also a very good reflection that they haven't done their research when they approach us. So on our side, we have a team of analysts who also go out and search for good companies to support. So it's really both ways.
That's really interesting. I've just seen quite a few questions come through from the audience, so I might ask some of those as well to you, because there's a few here. So the first question is, what is the status of your fund? What's the typical size of investment, and does your investment have a maximum amount? So I think it's a great question.
Okay, our typical check size is USD mil. We would like to stick with that. US dollars 1 million as a starting point. We have gone as low as 500,000, but we would like to avoid that. Obviously, this is based on suitable matrix and suitable valuation. We will want to have the rights to follow on, invest when you raise the next round and so on. So we definitely have capital or dry powder in our industry lingo to invest in you as you grow. This is for the current fund. In the past, when we were doing a much earlier stage, then the check size would have been earlier. But those are in the past. Yeah, I think I answered the question.
Yeah. Okay, the next question. In this situation, what do you think, so what type of startups would survive?
Wow, okay.
That's a hard one.
I would say founders who are really making the effort to pivot or to conserve cash if their business model just can't pivot for whatever reason, and make sure that you hopefully are the last man standing or last woman standing when the crisis when the economy recovers, as it will, as in proven over the last few decades, that every time a crisis like this comes along, we will recover. No one knows how long, but
Sure.
when we do, are you ready to take advantage of the growth that comes along?
Yeah. Next question we have is, which sectors do you think will be affected in the next years?
Affected. Okay, I'm going to take it the positive way rather than the ways that, rather than which sectors will die a natural death and so on. I'll take it a positive way.
Yeah.
We think that sectors that are focused on food or agriculture will be ripe for growth. We are also looking at what we call, in general, environmental, social, and governance (ESG). It's a pretty hot buzzword right now for several funds. I think in Asia itself, we are probably the only fund right now, or VC fund, probably the only VC fund right now looking into this space. So on the environmental, social, and governance side, we are looking at impactful companies to back. And by that word, I mean companies that are really solving impact issues. For lack of a better catch-all phrase, I can refer to the United Nations 17 Sustainable Development Goals as a guide. But so you cover some of those. We are also interested in emerging Asia itself, and emerging Asia, there's just plenty of opportunities. Singapore, where I'm based, is just one city in Asia itself, and different cities develop at different pace. So what we are seeing in different cities can be transplanted, and hopefully by locals, to work in their local economies.
This next question ties in quite nicely with your answer. So they've asked whether you're looking to invest in West Asia, like Middle East countries.
So we have already branched out to cover what we call emerging Asia. The emerging Asia part covers, as I said in the beginning, it covers South Asia, it covers Central Asia. We are definitely agnostic. We if there is something good from Turkey itself or from anywhere in West Asia itself, my question then would be why not, right? So yes, we are.
Okay. So the question is, there was a globalization for the capital and startups. Do you think it will last?
I'm sorry, I didn't really catch it.
So the question is, if there was a globalization for the capital and startups, do you think it will last?
Globalization for startups.
Yeah.
I'm not okay. Let me try my best to answer it based on my understanding of the question. I think startups, you have to conquer your home ground first. WeWork wouldn't be where it is if it didn't start off with conquering, say, New York or conquering San Francisco first. If you're not strong in your home ground, how are we as investors certain that you are able to conquer your surrounding regional your region? And then after that, how are we confident that you have built up enough experience conquering your region to go global? WeWork, despite all we say, it is still a global company, but it wasn't global day one. It was global. It became global over the last few years. So it's a process, and to expect a new founder to immediately be able to run an international or global company, is going to be hard to believe. So it has to start from your own country and then the region, and then hopefully you're able to go global. I hope that was the angle of the question, and I hope that I tackled it.
Yeah, you did definitely. And I think also you bring up a quite good point there, where it's better to grow organically in your own territory first and then expand globally. I think a lot of startups like to run before they can walk, but yeah. Okay, next question. By this outbreak, how do you plan to get new flow of startups?
In terms of startups, we are seeing actually an increased flow because companies that need to fundraise will have to continue fundraising. They can't stop unless the founders gave up. So it has pretty much been business as usual for startups needing to fundraise. What has changed is the way that fundraising is done. So rather than a face-to-face meeting, conference call like what we are doing right now is the norm. And because conference call is just a bit harder to get the in-person personal touch, so therefore it's just a bit slower or harder to seal a deal. It's just a lot more doing calls like this and due diligence and so on, checking with other people just to make sure that we are getting the right vibes before a deal get done. So it takes a bit longer.
And speaking of startups again, do you think there'll be a valuation correction for startups? I'm guessing after the pandemic.
You don't have to wait until after the pandemic. Currently, startups that are coming to fundraise already has a valuation that is adjusted. Because remember, startups are raising money for future growth. They are not raising money to support their old growth. It has to be for the future. And in the future is a COVID situation where spending is reduced, where people cannot go out because they're all working from home or for whatever reason. So
Sure.
therefore, fundamentals are adjusted. Therefore, valuation will have to be adjusted. What their past track record simply prove that they are able to execute and deliver on what they previously promised their investors. So that's an assurance for us. But going forward, valuations will be adjusted because fundamentals are adjusted.
Mm. And I think we can do one more question. It says, do you lead the financing rounds and do you take board seats?
We lead financing rounds. We lead as many as possible of our financing rounds. And I would like to say that I like to think that most founders like us to lead the financing rounds because while we try to be as fair as possible to investors, I think we are also very founder friendly. So we lead all the rounds, and we definitely also take board seats. This is also probably a reflection of what the other investors, uh, how the other investors view us. I think they would trust that we know what we are doing on the board to ensure that their investments is maximized and at the minimum protected.
Mm-hmm. And a question has just come up on screen. In this situation, what do you think, which type of startups would survive? But we've already, we did answer that one a bit earlier. Do you co-invest with other VCs? I suppose you did touch up on that briefly, but
Yes, we do. We do co-invest. In regions like, for example, in Turkey or in West Asia, where we are not so familiar with, if there is, it definitely is, it's not possible for us to go there and say Quest Ventures is going to lead around because we know everything about West Asia. It's not possible. So on that, we want to work with local VCs who understand the ground, and we are co-investors with them.
Mm-hmm. Okay, and I know I said the last question. One last question. How long does it take you to invest?
For a carousel deal, it was I met them and then I went back to Beijing to do my startup and so on. And the whole process when so I know them for a while, and when it came time for them to raise the money, it was a phone call, and the same night the money was transferred. That's because I already know them. So going forward, right now we think it will take no more than a month to decide, and no more than 2 to 3 months before the money is in your bank account.
Mm-hmm. Very quick process. Okay, so I think we've kind of touched upon a lot of interesting topics. James, you've been very insightful. One thing I want to ask you is, maybe something that we can close on a positive note. What's a few things that are exciting you right now in the industry? Is there anything that you're really looking at, paying attention at, or something that's really exciting you as we go forward?
Okay, the sectors, I'll touch on two things. So the sectors that excite us are sectors that solve real life issues, not something like, say, for example, AI solution that is just a solution looking for a problem to solve. So we're looking at real life issues. So for example, agriculture is one, and then pollution and those things revolving around environmental, social, and governance is another one. Real life issues that impact real people. That's the sectors. On the other side, another point would be founders. This is one of the most exciting times for us because the founders right now who are tenacious and really trying to survive and making sure their company survive. We are now a lot of our partners in our company are now working quite closely with all of them to make sure that the financial modeling or the necessary unhappy stuff like retrenchment and so on are done professionally and appropriately legally, and or building up core competency so that we are all prepared for the upturn when it comes. So these are really exciting times because operationally right now we get to be operators again, to feel alive again in a startup, and it's very hard for VC to have that kind of mental mode because when times are good, everybody is making investments. It's very hard for us to roll out our sleeves to dive into companies, but now we have the chance to do so. That's what gets me excited every day.
Well, thank you so much. You've been such a pleasure to talk to. Is there anything that you wanted to add before we kind of close off the interview?
I think this is a good initiative by Startup Istanbul. I appreciate the chance to talk about Southeast Asia here. I also appreciate the chance to know the questions that our West Asian friends want to know. It has been an interesting opportunity for me. Thank you.
Thank you, James, and thank you, Alara, for being with us today. It was a great interview, I guess, and we will be also publishing this interview on our YouTube channel at Startup Istanbul. And we hope to see you both in Istanbul anytime soon. We are planning to organize Startup Istanbul on 20 to 22nd of October. We hope to do that, of course. And thank you again for your time. Have a nice day.
Thank you.
Thank you.
Thank you. Bye-bye.